Prepare for a storm in the stock market, as legendary investor Jeremy Grantham warns that we're on the verge of a catastrophic crash. Drawing parallels to the infamous crises of 1929 and 2000, Grantham predicts an epic burst of the market bubble. With his estimation of an 85% chance of a crash downgraded to 70%, he asserts that the emergence of artificial intelligence, AI, has temporarily delayed the inevitable. However, Grantham's track record of accurate predictions raises concerns about the future. Will the economy plummet swiftly, and how far will it fall? How will other economic variables and global issues impact the situation? These questions linger as investors brace themselves for the impending storm. Welcome to Global Economic Drops, where we bring you simple summaries of important daily and weekly economic news from around the world. Our mission is to simplify the economy and help you navigate the treacherous waters facing investors today. So, before we get into today's videos, hit that subscribe button and turn on post notifications by clicking the bell icon. And if you find our news briefs valuable, don't forget to hit the like button. Leave a comment down below telling us just what you think is going on with the state of the world, and share this video with a friend or two so that you can all stay updated together. Thanks for watching, and now let's dive into it. The stock market is teetering on the edge of a precipice, warned Jeremy Grantham, a revered investor renowned for his expertise in major market crashes. Grantham, co-founder of GMO, an investment management company overseeing nearly $65 billion in assets, believes that the market is hurtling towards a catastrophic burst, similar to the devastating crises of 1929 and 2000. While his previous estimation placed the likelihood of a crash at 85%, Grantham has recently downgraded it to 70%. Nevertheless, he remains steadfast in his belief that the market has laid the groundwork for bubbles to burst, although the rise of artificial intelligence has momentarily postponed the inevitable. Speaking in an interview with WealthTrack, Grantham, an expert in long-term investment strategies, highlighted the favorable conditions that have fueled the stock market for nearly a decade. Referring to the significant market bubbles of 1929, 2000, and 2021, he expressed his interest in witnessing the really great bubbles. Grantham argues that the current market scenario has checked off all the boxes, including prolonged economic upswings, a robust bull market, and strong earnings. History indicates that each of these scenarios was followed by a sharp decline. Examining past crashes, Grantham pointed to the infamous Black Thursday of 1929, when a staggering $14 billion was wiped off the market in a single day. The year 2000 witnessed the Nasdaq losing 76.81% of its value within 2 years, while 2021 experienced a 10% downturn. Grantham highlighted that the recent rally leading up to the predicted crash was indeed all present and correct, citing the S&P 500's 20% surge in June compared to its October low. Jeremy Grantham's gloomy predictions have a history of accuracy. 2 years ago, he warned of an impending bubble of epic proportions, highlighting extreme market conditions in various sectors such as housing, meme stocks, and bonds trading at historic lows. Subsequently, many of these assets face significant corrections, with meme-driven shares like AMC witnessing a substantial decline by the following summer. Considering the potential impact of an implosion, Grantham raises critical questions: how swiftly and for how long will the economy descend? How low will profit margins plummet? While some decline has already occurred, there is room for more significant downturns. Furthermore, he contemplates the implications of global trade disputes, conflicts with China, and the future of warfare. Predicting the outcome in these turbulent times remains incredibly challenging. Grantham expresses concern about the emergence of a mini-bubble attributed to disruptive technologies in the tech industry, particularly artificial intelligence. Companies like Microsoft, with their explicit focus on AI, have experienced substantial growth in share prices. Similarly, Meta's CEO Mark Zuckerberg saw his wealth surge by approximately $40 billion due to the company's pivot toward AI products and services. However, Grantham remains uncertain about whether AI will be sufficiently robust to prevent the market bubble from bursting. He acknowledges that the advent of technologies like ChatGPT influenced his decision to scale back his prediction from an alarmingly high 85% to a still worrisome 70%. Grantham notes that the AI rarely primarily operates within a niche market and adds complexity to an already convoluted landscape of factors such as inflation, interest rates, and geopolitical conflicts. The future impact of AI remains subject to debate, with Grantham highlighting contrasting opinions regarding its transformative potential. While skeptics dismiss it as mere trial and error learning, proponents believe it will revolutionize productivity and society at large. Grantham's conjecture is that AI will not exert its influence in the immediate future he envisions. He predicts a traditional bubble bursting, followed by a customary recession, declining profit margins, and stock market volatility. Only then, according to Grantham, will the real effects of AI become apparent. As investors navigate this uncertain terrain, contemplating the possibility of a crash and the role of AI, one question arises. What are your thoughts on the future of the economy and the potential ramifications of AI in the market? Share your thoughts in the comments section below, and remember to subscribe to the channel to stay up to date on global economic news. See you on the next video, and please like and share if you enjoy our content.